Hello everyone, and thank you for being here with us at this session, Blockchain 101, the first section. So I'm David Servais, founder and president of Blockchain at HEC, created in 2017 to share knowledge about Web3, blockchain and crypto economy, and connect all the ecosystems about Web3. So today, as we said, the first session of the Blockchain 101, and we are very happy to be here with you and to come back to the fundamentals of blockchain. So we will moderate this session, the four of us, so Ethan, Marwane, Benoit, and myself. And we are all part actually of the blockchain lab called Unblock, with four core activities: recruitment, so training, an accelerator, a digital accelerator in Web3, and consulting activities. So first of all, I'd like also to thank our prime sponsors, Stake Capital Group, PwC, as well as DNA Partners and Taurus, and our partners also HEC alumni, HEC Paris, and all the 100 speakers companies who have already come to shed some light on the world of Web3 on our Zoom and in-person events. I remind you that we have 2 or 3 webinars a month, and the big in-person event on the 2nd of March about metaverse and business. It will be downtown Paris. You can register already. So stay tuned by following us on LinkedIn, the LinkedIn page, the website, blockchain-hec.com, and our Discord also. If you're not already in our Discord, I really encourage you to join. I strongly also invite you to register to these conferences, which are free, open, and available to all. A link will circulate in the chat to register. So yeah, that's it, guys. I invite you to introduce yourself. The floor is yours. So please, Marwane, if you want a few introduction,
okay,
and
sure.
You can start off. Yeah.
So my name is Marwane. I co-founded Avicen Agency, which is a Web3 agency that I co-founded 2 years ago. We basically provide Web3 development services to our clients. So we help them build Web3 products, so full stack web and architecture and development of smart contracts. We've worked with many clients in DeFi, NFTs, with bit marketplaces, NFT auctions, a DAO also, and yeah, we can build all DeFi and decentralized applications. So that's our job, and we help entrepreneurs build great products, and we give also mentoring and training to them.
Benoit, go ahead.
Yeah, I'm Benoit Dieuleveult, so I'm an engineer from the NCS in Toulouse, and I'm doing the Master XHSC Entrepreneur in Paris. I've been passionate about cryptocurrencies for the past 3 years, and I'm happy to see you all.
And please, Ethan, go ahead.
Yeah. Hello, guys. My audio might be a little bit but yeah, I'll try my best. Yeah, so I'm currently doing the Master in Management program at HEC and helping David to build blockchain at HEC and also the blockchain lab and all initiatives associated with it. I have a background in venture capital, and blockchain is one of my favorite industries to cover and to learn about, to have fun with it, and that's what we're doing here. And today we're going back a bit to the fundamentals and trying to break it down for everyone. And lastly, thank you all for joining us.
Thanks, Ethan. Maybe Marwane, could you would it be possible to share your screen now, or let me check?
Yeah, maybe if you share it and I tell you when to skip the slides, or do you want me to share it?
Yeah, just 2 seconds. I need to co-host. So you co-host. Normally you should have the right to share it. Yeah, if you can.
I don't see where I can share the screen. I don't think I have the right to do it. So we'll start with the session 1 today. We'll go through a few subjects. So the first one is, what is a blockchain? To go through the basics. We'll see the different types of blockchain that exists. What are nodes also? The blockchain metrics. So how can we track the metrics of a blockchain? Blockchain addresses, and we'll finalized with blockchain wallets. You can
excellent. And also, yeah, I heard that we probably also have some very quick discussions on use cases, blockchain use cases, concrete ones, to know exactly where we. Okay.
So what is blockchain? That's a nice question to ask. And it's a big subject because it's quite complicated. Actually, when we'll go through the advances of this technology, we'll be less and less asking this question, because today we don't see a lot of people asking what is internet, for example, but everyone is using it. So with all this transition and all the advances of this technology, we'll be less inclined to answer this question. But now we can go through it. So actually, blockchain is a transaction database. So it's held by all nodes participating in a network. And basically, what is a node? It's a computer that runs the software of this technology, and it's used to complete the history of transaction and validate and store all the transactions. So actually, the transactions are bundled in blocks. So you can see on this slide like 3 blocks. They all contain transactions, a list of transactions, and there is a lot of consensus. So, for example, the Bitcoin blockchain use the proof of work and mining to work, and all the miners can like solve problems to add transaction on the blockchain and to help make it more secure. Yeah, so mining is the process of computing to be the next to find the answer that solves the current block. And new blocks cannot be submitted to the network without the correct answer. So that's a very, very important aspect of it. The mathematical problem in each block is very difficult to solve, but once a valid solution is found, it is very easy to verify. It is extremely difficult to modify a block once it has been in the blockchain for some time, because every block after it would also have to be generated again. And you can see that there is hashes. At the beginning of each block, so you can see it as a distributed layer. So it's like you have some books, and each book contains a short resume of the last one, and it's called a hash. So all the previous block has been hashed to be on the next one, and yeah, so you can't fake it, because it would mean that you faked all the previous ones, and that's basically impossible, at least for the Bitcoin blockchain. There is many types of blockchains. We all know the public ones, so Bitcoin, Ethereum, and Solana, and everything. There is many advantages and disadvantages on each types. So for the public blockchain, the advantages are basically like they're trustable, they're secure, that they're open and transparent, so everyone can go and look all the transactions that have been made on this public blockchains. So for example, with the Ethereum, you have what is called an indexer called Etherscan that you can go through and look every transaction that has been made on this blockchain. You can also verify your own transactions. The disadvantages are like lower TPS, transaction per second. They're very slow. It is hard to build scalable products on them. You can't like build payment solution on Ethereum, for example. It's very slow and it's very expensive. And there is a high energy consumption. That's true for proof of work blockchains, not for every type of blockchain. So Bitcoin, for example, there is said that it is a very high energy consumption, which can be debated because it depends on the types of energy that are used to run it. But
exactly.
Yeah, but it's basically it. You have private blockchain like Hyperledger and other types of private blockchain. The advantages are the speed and scalability. Well, that's a very good advantage in terms of building products on top of it. But the problem is the lack of trust, the lower security, and the centralization. You can't go in the private blockchain and look all the transaction. You can't verify everything, and you have to trust the entity that runs it. So, for example, if a bank or big corporations run private blockchain, you have to trust them. For example, IBM has a private blockchain, and it's very criticized. You have to counter the problem, you have hybrid blockchains. So it's a mix of public and private blockchains. The advantages are they are secure and cost effective, but they lack of transparency, such as the private blockchain. So they have the disadvantages of the private blockchain, and they are less incentive. And you have to finish the consortium blockchain. The advantages are they're secure, but they lack of transparency. You have many metrics to compare the blockchain between them, like to see if they're centralized or not, if they are the TVL on it. You can.
So what is the TVL already? Just for
the total value locked. So it's the
total value locked. Okay.
Yeah. Is the money locked on smart contracts on this blockchain? And you can look on this different blockchain to choose one, the one that will suit your project.
Okay, you just raised maybe one concept, the smart contract one. So I'm not sure that everybody knows what it is, and maybe you can have like a just a short recap of the first version of blockchain, which was, as you said, the first consensus proof of work. And then what I understood is that there was a second generation with Ethereum which brought the smart contract technology also, and which is actually a piece of code of what if that you put on a blockchain, and that is actually activated through a condition to make the transaction.
Yeah, exactly. So the first blockchain, blockchain with the crypto, with the token, was Bitcoin. So they brought this innovation, but you can't do very much with Bitcoin. You can't build products on top of it. So Ethereum came with the principle of dApps, so decentralized application, because Ethereum is basically a decentralized computer that you can run code on it. So a smart contract is a code that runs on the blockchain, and you can execute the code on the blockchain. So it's code that has all the principles of the blockchain, which means it's immutable and you can't fake it, and it's transparent also. So that is a smart contract, and a smart contract is basically a thing that can validate transaction. You can do anything with it, and it's it's like, we can say that it's like a contract because it can hold money, it can transfer money, it can do a lot of things, and the TVL, which we were talking about, so the total value locked, is basically how much money is stored in a smart contract.
But when you say money, finally, it's tokens.
Yeah, it's tokens. Yeah.
Yeah, we're talking of digital assets. Yeah, exactly. Digital token. Yeah. So. Yeah, maybe if you have any remarks, we try to do it like not as a lecture, but really a chill out session, very conversational style. So don't hesitate, Ethan, also,
maybe
and Benoit.
Just to add, the first blockchain with smart contract was Ethereum. Yeah, it's why it's the biggest one so far. And after that, many competitors appeared, like Polygon, Avalanche, Arbitrum, which as first proposed like a similar solution for the users, but on all these blockchains there are different attributes you have to take in mind in order to choose the best blockchain you want to use for specific use cases. In the columns, you can see that there's a number of projects, and the TVL is really important because it shows us really like a big movement on this blockchain, and it's like just not a regular one where nothing happened. But as well, for example, in Ethereum, because it's the biggest one, there's the newest projects and the most of TVL, which is really nice. But every time you want to use it, the fees, for example, are quite high, and also the delay for TX for transaction might be high. That's why if you want to begin, maybe a Polygon or the BSC, for instance, are better choices because it's cheaper and faster, but you have like a bit less security. Like, do you take it with pincets? But it's like so in all these different blockchain, you have to make a compromise between all attributes,
Excellent. And guys, what's your favorite your favorite blockchain? Maybe Marwan as a developer.
As a developer, there is no really big differences in terms of technical things, because all the blockchain we use are EVM in our company.
Which is
blockchain we use, which is Ethereum virtual.
Yeah.
So
Ethereum virtual machine. That's it. And compatibility. Yeah.
Exactly. So if you look at Polygon, Avalanche, even though there are different blockchains, all the code that you put, all the code that you write can run either on Polygon, Avalanche, or Ethereum. So there is no difference on that side. But it depends on the project. Some people say that you have to choose a blockchain before beginning the project, but in fact, it's the project that chooses the blockchain. So it depends on what you want to do, and yeah, the ambition of the project.
So use cases oriented. Yeah, absolutely. Okay, so what's a blockchain node?
Well, a node is basically a computer that runs the blockchain software to validate and store the complete history of transactions on the blockchain. So it constantly exchanges information on new transactions and blocks. There is many different types of nodes. There is archival nodes, there is pruneful node, there is master nodes, light nodes, cold nodes, lightning nodes, and they all do different things, but the most important one to know is the master node. And so users run master nodes to earn network rewards. So some amount of native tokens has to be locked by master node operators. And that's the most important one. We can explain what is the cold node also. So they're using for signing transactions offline and storing private keys away from the network. So that's the one that you'll see the most when you do your research. So that's the one that you have to in my opinion, like remember. So master nodes and cold nodes.
Okay, you told us a bit about the metrics, but yeah, maybe a short recap would be, and comparison would be nice. So
there's a lot of there is a battle between blockchains, and they all want to solve three problems that we call the blockchain trilemma. It's the battle between decentralization, scalability, and security. And we say that when you go when you want a high security blockchain, there is at least one of the other metric on the trilemma that will be less good than the others. So, for example, we have the Phantom blockchain, which is a very, very fast, and so it's very like the TPS is very high, but it's very centralized. So they compromise the decentralization to make a blockchain that is fast and secure. Same thing for other blockchains such as Solana, which is very, very centralized. And the one like Ethereum, which is very decentralized, but not really scalable, but very secure. So they compromise the scalability for the decentralization and the security, which can be maybe which problem can maybe be solved for the Ethereum 2.0, but we will see when they make it out. So yeah, we've put some metrics for Bitcoin, Ethereum, and Polkadot, the throughput, the finality, and the threshold. But it's all come down to the blockchain trilemma. So between decentralization, scalability, and security.
Then you told also you talked a bit about addresses, hash and addresses. So what are all these terms about?
Okay, so an address is basically where you store your cryptocurrencies. So NFTs and tokens are assets, and there is two different things. There is coins, which are like the tokens from the cryptocurrency from the layer 1 blockchain, such as Ethereum. The coin of Ethereum is Ether. Bitcoin's coin is BTC, and all the other blockchains, and everyone can create a coin, a token actually, because and token are different from the coins in that matter. So the coins are used to run the network, and the tokens are like projects tokens. So talking about addresses, we only the key pair, and the key pair is the public key and the private key. You guys have seen it a lot, I guess, and it's generated with an algorithm. The most common one is the ECDSA, so elliptic curve digital signature algorithm. So the private key is what you usually use to sign transactions, so to send crypto to someone else. If someone gets your private key, they can basically transfer all the crypto to their wallets, and that's basically what we see. Usually, when people get scammed, it's because they've given their private key to someone else, either through a text message or Discord or anything. So people get scammed all the NFTs and tokens by giving their private key. So it's made very clear in most of the project, never give your private key, and never nobody will ever ask you, nobody that is well-intentioned will ever ask you your private key. And your public key is what you use to verify the digital signature. So it proves the ownership of the private key. When you sign a message on the DApp, when you send money, when you when you basically want to use your wallet, you have to use your public key. And there is the sample address, the WIF. So the wallet import format is a shortened version of your private key. So yeah, that's it. That's what an address is. And you can see like on Etherscan, what you see is the public key.
Nice. And yeah, okay, perfect. Thank you. So yeah, we tried actually we wanted initially to do like 20 minutes learning and 20 minutes Q&A with you, all the audience, and we're gonna try to speed up for the discussion afterwards. Yeah, thank you for your patience and listening. Go ahead, please, Marwane. Sorry.
Okay. So you've heard of I think MetaMask and Ledger. So they're basically two different types of wallets. So there's many types of wallets. There's paper wallets, which is called the safest option. There is hardware wallets, there's software wallets, hot wallet, cold wallet, and everything. So a hardware wallet is a little pricey, but there's always the risk of losing or breaking them. So like Ledger, for example. The software wallets are like MetaMask, it's a software wallet. If you delete them, your crypto is gone forever, which can be true, but it's not really true if you have stored your private key and your like seed phrase in a safe place. So if you've written them down on paper or in your note or whatever, you can always get your crypto back. But it's like the best way to be scammed for the beginners, because like it's on the web. You can copy paste your address. You can give it to someone and everything. A cold wallet is a wallet that is not connected to the internet, and it's connected. It's considered the most secure way to store your crypto. And in cold wallet, you have paper wallets and hardware wallets. So Ledger, for example, which is considered one of the safest way to store your crypto. The seed phrase is when you create a wallet, you have to store your seed phrase. So either it is MetaMask or Ledger, they give you a seed phrase when you create a wallet, and you have to store it. You have to store it very, very carefully. Yeah. So that's it. So
and then there's the custodial concept.
Yeah, the custodial wallets are the wallets that are part of a project. So, for example, all the wallets in centralized exchanges are custodial wallets. You have companies like BitGo, Venly that provides custodial wallets, and you also can find them on the like games and all the projects that don't want people to use private keys and public keys, because it can be like hard for beginners, and it can be criticized, but because it's not decentralized and you don't really own your assets, but it's necessary for some projects to go big and to expand to scale.
So non-custodial are all the wallets you just mentioned before, paper, hardware, software, and custodial are on exchange. Okay.
Okay.
Oh, consensus mechanisms. A nice one.
Yeah, I thought we left it for
Super
the
complicated one.
Maybe yeah, we can lift it for the session 2 exactly. And the bridge, and then we have the use cases. Maybe yeah, we can lift it to the session 2 anyway. Or we can talk about maybe one use case if you want, Ethan or Benoit.
Yeah, I can talk about some use cases, but I don't think I'm able to go through all 10 because that's gonna take probably 4 hours.
Exactly.
Yeah. I mean, I just wanted to recap everything that we've just said. I want to get back to like the super basic and fundamental way of explaining what a blockchain is. It's literally blocks of data chained up together. So just imagine there are, for example, Bitcoins, right? Bitcoin is built on a blockchain, and for Bitcoin, it's a ledger system where they record all the transactions in a block, and there's 1,000 transactions in each block, and those blocks are chained up together, unmodifiable and very securely on the chains. So it's called a blockchain system. I think that's more visual to understand what a blockchain actually does. And with that, so a lot of real life implications that can be done. For example, the first one, I can talk about the first one. It has to do with the financial industry and its feasible payments. So right now, a lot of big banks and big financial institutions, they're trying to adopt this blockchain technology in trading. So what it does is that blockchain is fast and it's secure. So it fits the criteria of clearing if the banks are, trading, for example, foreign exchange or bonds. They need it to be fast. They want the spot price, and they want it to be secure so that no one steals their money when they're transacting. So blockchain is the perfect way to do it because everything is transparent. It's on the block. You can see all the transactions. And so it's very secure. And then the second is that it's fast. If because they don't use public blockchains, they only use their private blockchains. So it's very fast. And on the forefront of that is JP Morgan in their sales and trading division. They have done a very high volume cable trade between their New York clients and their London clients on foreign exchange. So that is something that has never been done before because traditionally, foreign exchange swaps usually goes from one side of the bank to the exchange, and then the exchange will wire the money to the other side of the exchange and then wire it to another party who's exchanging the funds. But right now on the blockchain, they eliminated the middle person, the middleman, the third party, and they can just all do it on their own private blockchain. So that is one of the use cases, is that to make financial transactions faster and more secure. And then on the side note, Bitcoin actually was not developed to be a storage of value. It was actually meant to be used on a daily transactable basis because on the white paper it says peer-to-peer cash transaction service. So Bitcoin was actually meant to be used in a daily life to make secure payments and make cross-border payments faster and more secure. So I think that's one of the use cases on the financial part. I hope that I explain it clearly, or maybe I confused even more people.
That's really important to come back to the roots. I mean, this is the goal of this discussion, and this is clearly where it comes from. The first use case of blockchain with Bitcoin. So very nice, thank you, Ethan.
Yeah.
And it's a bit of teasing about all the use cases we will talk about in the session 2 actually. So yeah. And
I mean, there are way more use cases. For example, Marwane talked about it briefly, is creating smart contracts, eliminating the third party. The third one is Internet of Things. So a lot of things that we use are considered like smart devices, like smart fridges, like smart like air conditioners, like all the stuff. And that is one thing, is that you can use blockchain to power them and store all their data, for example, your house data on the blockchain. And then with that, you could do a lot of implications. And then the fourth one is real estate. It's quite of a hot topic right now because, with all the asset-backed securities, mortgage-backed securities, tokenizing real estate has actually already been done in the financial industry for a long, long time. And with real estate, with blockchain technology, you can make that process a bit faster and a bit more secure. And then the next one is personal identity safety. That includes that's more like an on-chain credential. So for example, we all have our passports, right? And your passport could be an NFT on the chain, so that no one could get fake passports anymore. No one could get fake driver's license anymore. It's all validated on the blockchain. And then the next one will be logistics. Super simple example is that DHL they're starting to use that to track their freight, so their cargo planes for commercial uses. And it's not retail yet, but they're using that for their commercial flights with a bit more complicated projects. And then it's entertainment industry. This is more on the intellectual property, copyright kind of basis, where you can have everything validated that you own it. Not have intellectual property dispute with the different parties. And then the next one is education. It's a bit more interactive way to learn. There's one project called Rabbit Hole. It's literally a door that you would first encounter when you go into when you want to explore the blockchain ecosystem. And we call it going down the rabbit hole. And then the next is healthcare. It's more on the pharmaceutical, on drug production, supply chain side. And then the last one is non-fungible tokens. And this is a very big topic, and it has been hot for a long, long time. It doesn't matter if it's commercial uses or just retail uses with NFTs and stuff. So it's a lot of stuff to talk about with the use cases. But here's a teaser.
Anas say that we don't see the slides, so yeah, Anas, actually we'll go deeper into the session 2. Actually, this is just a short teasing, but it was quite long for me then. Anyway, but we'll definitely go deeper. So healthcare, supply chain, finance, all these kind of use cases. We said also about freight, etc. We'll go through the session 2. We'll have also a few technical points to cover also in the session 2. You saw maybe bridges and consensus mechanism.
Maybe we'll do session 3 as well.
Yeah, there's so many things to cover. Maybe we can switch also now to the questions and discussions. That would be really interesting. I saw very interesting questions already. Regarding the consumptions and regarding also finally the validity of using Bitcoin and of the value proposition of Bitcoin regarding security, which is a hot topic, and would be interesting to know, guys, your opinion about it also, and particularly how the market, since Marwan is one of the professional around the table to deal with a blockchain technology every day as a developer. So maybe it could be interesting also to know what the market, what the demand of using this technology is today, and how they consider it, and also your opinion, of course, personal one.
Well, I quite agree with all the questions about the environment and the impact it has on it. So one of the good things that we can see nowadays is that there's a lot of projects that use Bitcoin or blockchain technology to tokenize carbon assets and everything. So what you can see now is there is a lot of green projects that, for example, they will take all the CO2 emissions from company and tokenize it and sell it between companies. So that being said, I agree that like we have to be aware of all the downsides of the technology, so energy consumptions and everything, and price also when there is one. But there is blockchains, and what I said earlier about the project makes the blockchain and the project chooses the blockchain is because there is some blockchain that market themselves as energy neutral, such as Polygon and other ones. So when you make a project and when you build a project around the green energy, for example, you'll choose your blockchain according to it. So many projects that build around this idea of green technology use Polygon, for example. And I think that's a great one because they market themselves as energy neutral or consumption neutral. And yeah, so I see many projects. I don't know if you guys have seen the European Union discussion about the objective of 2050. I think it's 2050. I'm not sure about it, but I think it's 2050. They want to have a neutral energy consumption continent. And to get to this result, there is a lot of projects that use the blockchain technology, actually. So that's what I see for the future. So it will be nice to watch the project. I have some of them that comes to us to build with them. Yeah.
But regarding the security of network, even the value prop of Bitcoin particularly, of course it uses the proof of work. It's not at all good for the environment. But maybe if you guys can say some also
yeah, that's true.
Comments for that. Yeah,
it's very energy. Well, it consumes a lot of energy, and that's for sure. Now, all the Bitcoin miners will choose the less expensive energy, and the less expensive one is the one that consumes the cheapest energy is the one that comes from renewable energy. So actually, the Bitcoin miners will improve and make improvement on all the research about renewable energy and how to consume less and how to go fetch energy where there is where's the cheapest. So basically, renewable and wasted energy. There's a lot of companies such as French companies like EDF and other like the barrage in the rivers. They have a lot of wasted energy. So there's a lot of companies that use mining, Bitcoin mining, that go see, they basically go see those companies that waste a lot of energy and use the waste energy to mine Bitcoin.
So what you say is that the ways that Bitcoin is working, what we call the proof of work consensus, is built in a way that it pushes innovation to reach the best performance in terms of energy consumption, in terms of energy, alternative energy price and consumption.
Yeah, that's for sure.
So that's a nice characteristic, I would say. And regarding security, which is today one of the, I would say, this is also a hot topic, but one of the most decentralized network, Bitcoin, and one of the in terms of security, one that has never been hacked today. We'll see with quantum technology, but today it's still a very performant one in terms of security.
Yes, yeah, for sure.
Maybe other questions do you have in the audience for maybe for a last one, since we are already we went out of time. Don't see any questions. If you have comments, questions, also Benoit or Ethan or Marwan, don't hesitate. How did you find this session, guys? I think it's one of the first time we do it like that, very chill. So
yeah, I think it's really nice for just beginners to understand the whole idea about blockchain, how it works, or what are the use cases. So really nice to have to just remember for everybody.
Yeah, maybe next time would be nice to have maybe more focus on the use cases. We try to send you also a Google form to know your feedback. So you will receive maybe soon like an email for knowing on what topic you would like us to talk about more deeply. Yeah, maybe Ethan, if you want to conclude and have a final words for closing this session.
I think just my remarks. I mean, I feel like it was really good that we do it in a very chill, setting, conversational. But I think we've put too much information, like
definitely.
Yeah, I feel like we need to break it down a bit, so that everyone has because it's called blockchain 101, right? And yeah, so maybe we should start really basic, fundamental, and then build on it. Yeah, but besides that, I think it was really nice. And then this is the first time we're doing this, so we're definitely trying things out, making things better, and
having your feedback also is really important for making it better. So your contribution is really key here. So guys, don't hesitate
everyone's contribution is super key to us. All the feedbacks, it's just making us better, right? Next time when we do stuff like this. So yeah, and thank you all. Thank you, Marwane. Thank you, Benoit and David, for organizing this. I think next time we'll try to improve on what we'll based on the feedbacks of you guys. And then I think our next event will be in February now, right?
It will be on February, exactly the 9th of February. We have a session with VC, Venture Capital in Web3 investors. And the next session will be the 23rd of February with in 101 DAO, but I think it could be interesting for to have the 101 session 2 for blockchain, the follow-up of what we're doing.
Yeah, we might need to adjust a bit on the pace.
Exactly.
But definitely stick with us, and we'll try to make everything super simple for everyone to understand what blockchain actually is, what it does, and what's the logic behind it. And just
if you guys are okay, we can share also the PDF documents. That could be also something interesting for if you put your email address, we will keep in touch and send you all the material.
Yeah, for sure. And for today's session, you guys can see the replay on our website, on our YouTube channel, and podcast on Spotify. So if there's anything unclear, you could just go back, rewind, and listen to it. Yeah. Okay. So last chance. If there's no more questions, I'm just gonna conclude.